How's everyone doing tonight? I hope you guys all had a safe and proactive day in the markets today. So I'm going to be talking about Draftkings Dkng. Our beloved Draftkings, really can't seem to get out of its own way, along with, a lot of small caps, a lot of big runners, high flyers in 2020 and the beginning of 2021. Draftkings is one of those stocks that's just been slowly fading. So if you do have long positions in Draftkings, maybe not so much now than I would have done back in, the beginning of November, even October. But if you are hedging puts, okay, so I would be hedging your long positions with some sort of puts, okay, just due to the fact that every single pop that DraftKings gets sort of gets faded. I don't know exactly how long this sell off and this consolidation down at these extremely low prices is going to last. It's not just DraftKings, it's a lot of small caps in general. The IWM, if we really take a look at the IWM, and that's the Russell 2000 ETF. So a lot of these small cap stocks are going to get grouped into, that kind of into that bag. Okay. That chart looks very nasty. It's trading. Let me take a look. Let me take a look real quick, just before I start talking out of my ass. Yeah, so just look at how nasty this chart is. From the perspective, it's trading below the 50-day moving average. It's trading below the 100-day moving average, the 5, the 10, the 20. This thing is in its own bear market. It's down 3 points today, another 1.5%. The small caps are really in a big correction. How long that correction is going to last, I'm not sure. Nobody really knows, okay? If we all had the answer for that, it'd be so easy to time the bottom and start buying the dip on all of these, great stocks that we hold near and dear to our hearts. But the thing is that until the IWM can show some sort of life, and what I mean by life is it's got to start reclaiming the 5-day moving average, the 10-day moving average, and the 20-day moving average. Until it gets above that, I really would not recommend buying the dip on a lot of these small cap stocks, and that being DraftKings. If you're currently holding a position, I'm not going to say to sell the position. I would never tell anybody to sell their position. I believe in DraftKings long term, but for the short term, the next month, 2 months, I would definitely start hedging a long position with puts. What I don't like about what happened with DraftKings is this whole $27 to $28 range, this gray box that I have highlighted here. This was acting as a level of support, acting as a previous level of support and resistance way back when. As soon as we lost this level, we put in lows of $25.80 here. What I don't like about today's price action, if we just go back to Friday here, we got that nice push in that close over the 5-day moving average. That's great. That's a start. Today, what I don't like is market was down along with the IWM. It makes that push over the 5-day moving average and then gets rejected. So it keeps getting rejected at the 5 and the 10-day moving average. If we just kind of go back here a month, this green line here is the 5-day moving average. This blue line is the 10-day moving average. You can see we're just riding below the 5-day, riding below. And anytime we pop back up over the 5-day moving average, we get rejected at the 10. We have not even tested the 20-day moving average in over a month. That is never generally a bullish sign. So what I'm trying to tell you, everyone who's holding long positions, that doesn't mean start loading up, adding to your longs here, because this could realistically fade for another couple of weeks, a month, 2 months. DraftKings might come under $20. I'm not saying that that's going to happen, but you just kind of get the idea. We have to kind of throw away, the thought of you think that it's too undervalued right now. You think that it's too sold off. That's fine. DraftKings may very well be oversold. But the point is that the IWM and a lot of small caps are also oversold, and they've been in their own bear market. So we can't just say that because we believe that DraftKings is oversold that we can just start loading up on the long side. We've got to get some sort of clarification, and we've got to get some sort of evidence that there's some sort of change in pattern. There's some sort of reversal happening here. And to say, it's sad to say it, but right now DraftKings is not showing any form or any sort of reversal here. Anytime we pop up over the 5 and 10 day moving average, it looks great and it gets faded again, multi-day fade. Anytime we come and test the 5 day moving average, we get this pop and then they fade it. We get a close over the 5 day moving average and they fade it. So what I'm trying to say is we need to get back into this zone being $29 into this $31 range. This is going to be its own little range. I'll start getting a little bit more bullish if we, can start taking out the 5 and 10 day moving average. I really don't see some sort of reversal in trend here until we can get over this $34 area. This $34 area is going to be recapturing the 20 day moving average. That's a great start. Also, getting over this $24 area is going to get us out of this bottom channel here. You see this blue line that I'm dragging my cursor over? This is a bottom channel here on the linear regression channel 50. This is going to act as a level of resistance here. You can see when we kind of came up into this area, we got faded. This area was acting as support 1, 2, 3, 4, 5 days, or back in late November. And then when we broke through, we've never tested it again. So it's going to be a level of support, a resistance. This $34 area is going to be a level of resistance. For me personally, I wouldn't start adding into your position until we get over 34, show that we can hold that level, back test it, and bounce off of it, because that's going to be the next push higher into this 38 and then the 50-day moving average at around $40. So until we can start reclaiming these lower levels, the 5, the 10, the 20-day moving average, just kind of be patient here. Instead of buying more, calls, or instead of adding to your position here, just hedge your long position with some weekly puts. If this thing wants to continue to fade, take your 15, 20, 30% on those weekly puts and just kind of parlay that back in and keep repeating the same song and dance here. But don't add too much to this position just due to the fact that if it does decide to fade for another, 5 days, 10 days, 20 days, 30 days, what good is adding at 25 if it's coming to 20? I'm not saying that it's coming to 20, but I'm talking in theory. You kind of get my point. Why not just hedge your position with some puts to the downside and then kind of ride this baby back up as soon as we start reclaiming these moving averages? So until that IWM starts getting out of its own way and getting out of its own bear market, just stay very, very cautious with these. I feel really bad for DraftKings. I believe in the company. I love the company, traded it multiple times over the past couple of years. And, it's really tough because there's a lot of stocks that are in this corrective territory now. I mean, it's just their own bear market. I could go through a bunch of them. SoFi, Fubu, Skills, the IWM in general. I mean, most stocks in the IWM or small cap stocks, Corsair, there's so many of them. They're in their own bear market right now. So we just have to stay patient. I know it's difficult to watch your portfolio kind of slow bleed like this, but if you do have these positions, just hedge yourself with some puts, or even hedge yourself with some puts on the IWM. Take some IWM shorts, and then, weeklies, and then just as long as that's fading, you're hedging your long positions by shorting the IWM, and I think you might do well doing that until the IWM really starts reclaiming some levels. That's when I'm going to really start to look at some of these small caps, but it's not going to happen right away. I know a lot of people are saying that, a lot of people in tech, so a lot of people that are, feeling it on the NVIDIAs and the AMDs and the Apples and the Netflixes and the Amazons, the people who are feeling it right now in those stocks, the people who have been trading and holding small caps have been feeling this kind of pain for already a couple of months. So you guys are already, you guys were the first ones to feel this pain. Now everyone else trading the Qs and, the big dogs of the world are starting to feel this pain. So until we start getting out of our own way here, we just need to be very, very cautious and wait for some sort of technical confirmation that there is some sort of reversal in trend here, because it's any kind of consolidation, green consolidation gets faded. Any kind of green pop, 1, 2, 3 days gets faded. Consolidation gets faded, gets rejected. So let it get out of its own way, guys. If you want, join my Discord. That link is down in the description box below. Also, give me a thumbs up, subscribe to my channel, drop me a comment, and I will see you guys all in the next video.